All right, so we are Sunday. This is the fourth week and probably the last one of this experiment. Um, Basically, on Sunday, usually what I do is I look at my plan for the week. I don't necessarily have a trade in mind, but I have a plan. So right now, my plan is still to short the US dollar because of this movement that we saw. We have an overshoot, and then we had on the 4 hour, we have a Y curve distribution pattern type 2. So it broke the trend line. It came back inside of the big range that we have here that is expanding. So my aim right now is for this is a regression trend after an overshoot. So this is the general plan, and now I'm trading the USD yen. I'm short still, as you can see from this from the account over here. The market is closed right now, but it will open shortly in a few hours. So the first support is going to be this line, and I expect some type of small accumulation that might last for a little while at this point. It wouldn't be surprising. So I'm gonna tread very carefully. My goal is to increase my position. So I've liquidated as much of my position as I could of my exposure to the US dollar, because I know we're coming close to the support, and it could, from here, it could also retrace. I mean, if you look at the on a 15-minute chart, for instance, like this is very extended, so it is possible that we're gonna have like a very strong retracement from here. So I didn't want to give all my profit away. So right now my plan is, while I keep in mind that there's a support over here that is my first main target, if you will, I still think that there's potential for a retracement here where I could look for an opportunity to short again. So at which point do I think I'm going to be wrong? So I'm going to trace a line over here. If this gets penetrated to the upside, this this trend line over here, I might consider cutting off the trade, because it could go into sideways movement for a long time. That can occur as well, but it's not my impression. What I think is that this was an overextended move, and I think we have a good chance here that it's going to reach this support over here. If this gets broken, then the next support is in that zone, and then the horizontal support are in these zones, and then we have some more trend lines over here. So these are all possible bounce points, but you know, these just give me general ideas. It's not necessarily specific targets, but it's zones that I have to stay aware of, basically. So that's it for today. I think I'm gonna make a video maybe tomorrow morning, or if ever I decide to, I see an opportunity to short some more, I'll keep you updated. But for now, my plan is to do nothing, because I already have the position that I want. I've already cashed in a lot of the profit from reading this situation well, and I'm gonna try to short some more at the better price soon, so I'll keep you updated. All right, so this is Tuesday of week 4 of this little challenge that I put myself in trading this micro account. And basically last night I opened a few positions, and I wanted to explain the rationale behind it. So the last month has been about shorting the US dollar for me. So I went on a weekly chart, and I looked at an opportunity, and what I found was this. It could have been something else. It could have been on the yen. It could have been on a single pair. But now it was a broad US dollar potential weakness that I saw. So I went for that. I saw a Wyckoff distribution type 2, and I shorted the pair that that I felt would be a good candidate, which was the US yen. But now I wanted to diversify a little bit and go into the Great Britain pound. And the I saw an overshoot on the downside, basically the reverse, because of course, if the US dollar is weakening, then the Great Britain pound versus the US dollar, the Great Britain pound would buy more. So it's exactly the reverse as this, basically. Well, not exactly, but very close. So I'm trading against this, and I'm treating this as a reversion type of trade. So I shorted the, let me see here. I went long, sorry, not shorted. I went long at 188, 1.1869. 1.1869. So it's going to be, I'll go on a lower time frame. But basically, the rationale behind this trade, or trade idea, because I might get in and out and get in and out a few times, like it's how I trade, but the idea is that I want to target this mean reversion here. So I think there's potential for price to go all the way here and then maybe overshoot a bit like it did here, but that's the main idea behind it. Also on the Great Britain Canadian, I saw something similar. So the idea here is that we have a strong overshoot, and this level was rejected very aggressively over here that we see on the weekly. So this is the type of thing that I really pay attention to. Often these V-shape recoveries, if we go on the daily, it's going to look like a V-shape basically. Oftentimes what these patterns do is something like this, some type of consolidation, and then it goes in the direction. And it's very chaotic to trade. Like right now, it's doing it a bit more on the upside, but the idea is the same. So whenever I trade a V-shaped recovery, I try to take into consideration that there's going to be choppiness like this, and I might have to put a very wide stop at the base of that pattern, but of that turbulence pattern, if you want, that's going to happen after. It doesn't always happen, but a lot of the times it tries to shake out basically the weak hands that have stops that are too short. So right now, this is the pattern that I'm trading on the Great Britain Canadian. So this is what I'm working with over here. So I went long on this one last night, Great Britain pound Canadian, and the pound US, I just went long this morning. So I didn't put both of the trades because basically whenever two pairs have the same currency in them, then you're not really diversifying too much. You're basically over leveraging. So I wanted first to establish one on the one that I felt was more overextended. And to me, it was the Great Britain Canadian, the pound Canadian. So this overshoot and the fact that it didn't even reach this over here told me that the elastic is a bit farther from the reversion to the mean. So I went long on that one. And then this morning when I saw the trade was working in my favor, then I added to that pound US as well. But it's basically the same trade. I'm trading a reversion on the pound. So I have a couple trades that are trading based off of the US dollar, and now I have a couple trades that are trading based off the pound using the US weakness and a bit of Canadian as well in the mix. I almost went long pound yen, but it's not as pretty as the other ones. So I didn't act on it yet, but it's basically the same principle. I think that from here, you know, we had a V shape on the pound on many crosses. And I think that what's happening now is that it really overshot and then it retraced, and now I think it's going to keep going up. So that's kind of my thinking at this point. And then you can use indicators if you want to time your entry. But basically everything, all of my analysis, the base analysis that I do in order to find opportunities is always done with a naked chart. I think that finding patterns, identifying your trend lines, your overbought, oversold zones, overshoots, reversal patterns, ranges, and things like that. I always do it manually without anything on the chart. And then I look for path of least resistance. So I'll go look at pivots. So now let's go on the Great Britain Canadian. So I saw last night, I saw that we were trading above the daily pivot, and we were trading above the weekly pivot. And what happened from Sunday is that price went to test the weekly pivot and then got rejected right away, and then it started doing sort of a pennant pattern. So I went long, and now I'm in profits. 185 pips or so. So on the pound US, same thing. It's the same pattern basically. We broke this this resistance, and now we're heading higher. I'm in the path of least resistance because I'm trading above the daily pivot and above the weekly pivot. So it's looking good. And what else do I have? Oh, I opened New Zealand Canadian as well. So let's take a look at that. So same principle with the pivots. I'm above the weekly pivot, and price was barely able to penetrate the daily pivot, and it went beyond this. So I went long. I think it was around this zone. Let me check the price. It's 81.20. So 81.20. Yeah. So it was in that zone here. So now I've got a couple more trades. I'm looking to establish some more positions on these. Unfortunately, I wasn't able to short more. Oh yeah, actually I did short more yen. I shorted at the low. Let me show you how I did that. But I wasn't able on the US yen to, where is it? US yen. I'm blind. There it is. So I thought that price would try to kiss against that weekly pivot. And it did not. It didn't even go beyond that. So what I did this morning is I shorted some more. I even shorted the US CHF, but I chickened out because I thought I had shorted at the low and it was going to reverse in my face for some reason. So I got out with a small gain, like did 10 pips, like 89 cents. But yeah, this was a good, probably a good entry as well. But so now I'm leveraged enough. My exposure to the US dollar and the pound is enough, and I have a bit of exposure on the New Zealand Canadian. So New Zealand Canadian, pound play, and then US dollar play basically. So I'm playing all these with different crosses, but the idea is exactly the same. And now I'm up $100 already. So I've almost doubled the account in 1 month. And if there's one thing that I want you guys to take away from this is that, of course, you can take like I was reading comments from a subscriber. You can take a $3,000 account, go into futures, and boost it up to 40,000 or 30,000 or whatever the amount was. But if you use that much leverage, if you go up that much. Like I've taken a $10,000 account in the past and brought it up to $200,000 within a month, but I lost it all in the next couple of weeks after. So leverage can work both ways. It can work with you and it can work against you really, really fast. And especially if your ego is triggered, if you start thinking that you've got this, like you're really, really a better trader than you actually are, you can really have a devastating effect, especially if you're not really disciplined. And if you go into options and things like that, then you can lose more than you've actually put into the account. So it's very dangerous to trade with too much leverage. And my goal with this series was to show you that you don't have to shoot for the fence all the time. You can play very defensively, make up an idea that's around a central currency or a basket of currencies that are related, and then try to see if you find some confirmations with technical analysis and with a trading system if you want. Like if you want to confirm, let me show you this real quick. Like I just made up this little system that's very, very simple. It's not what I use on my main account, but it's close enough. Like basically, if you go on a weekly chart and you find some type of reversal pattern, and you can then use multiple time frame analysis, like have a 4-hour chart to confirm the break, and then try to go on the 15-minute chart to try to find an entry using, you can use pivots, you can use, this is the opening of the day, the yellow line. It's the open of every day. I like to trade with that on my screen. And you can wait for buy signals from indicators. But what I want to say here is that even if you start using indicators, if you take every single signal, over time you will lose money. Like there's no indicator to my knowledge, and I've looked for them for the better part of my 20s, and I'm 43 now, I think 44. Of my 20s, I was looking for that magical indicator that would make me rich, and I never found it. I never even found combinations of indicators that worked all the time for long extended periods of time. I found a bunch of systems that worked for a few months and that made a killing, but then they would unravel, the situation would change in the market, and then the system would not be good for these conditions, and then I would lose it all. And that process is something that I've done probably 100 times, if not more. And this is why I got away from technical indicators. So I started to trade based off of a naked chart where I would identify key supports and resistances and trading patterns to trade off of. And then I would, if I want to not miss a move, I would use trading indicators. But nowadays, most of my trading is done manually with a naked chart, but I wanted to show you if I had to use a system, I would use like a multiple time frame basic layout like this, like just, okay, so I saw a pattern on the weekly, I saw the overshoot from this. So now I'm looking for longs. Do I have confirmation? Yes, I do on the 4-hour. And then I look for these signals on the 15-minute time frame to start trading my entries. And then the closer I get to the reversion to the mean, as I was showing you over here, like somewhere in the middle of this price range of this pattern. It's a bit harder to see because now the chart is getting a bit loaded. But this reversion here, the closer I get to that, the less I want to take a long anymore. Like I want to, now my goal is to try to get out because I made my money already. I'm already starting to be in profits. So now it's too late to buy. So now I stop buying. So basically now as we get close to the reversion, I think price is going to come over here. Maybe it will go through, you know, you never know, but the odds are getting less and less in my favor with this trade, and now see price is starting to reject a bit. So I'm gonna exit this trade pretty soon. So that's it for today. I'll see you in maybe tomorrow. All right, important update. I decided to liquidate my US yen position for the time being, because I'm seeing this, first of all, in the weekly, there was this big gap over here. And now what I'm seeing is a strong rejection from this low. So what this tells me is that we're not able to make a lower low. And so I decided to get out because this is a strong sign of rejection. So what I think is likely to happen here is that we might get at least to there, and perhaps even higher. I don't know exactly where. I think worst case scenario is here, but it's probably going to be lower than that. But I don't know. From here, I have to wait and see if I can find, like for instance, if price starts to go up a bit, and if I can find some type of trend break like this, and if I can short again, I would for sure. But right now I just decided to take my profits and hold my bags until I have further evidence that we can go lower than this, because this was very aggressive, and now we've spent a lot of time at the lows and it was rejected heavily. So I decided that this was to scrap this trade. So today, like about $58 or so on the US yen. But this was open last week, so it's not quite today. Like today, I made $45 about that with the 300 something account, 370, 380. What else? New Zealand Canadian, I saw rejection over here, so I'm gonna get out of that as well in a minute. And then what else? Great Britain Canadian, I got out of this one because I think it's going to revert. Basically, I think we're going to have a temporary retracement, and I think I'll be able to, if I choose to, I'll be able to re-enter these positions at a better price, because I'm seeing signs that we're exhausted for a while. So I decided to exit a bunch of positions. The only one that I bought is actually this one here, the Great Britain, the pound yen. This was a trade that I saw from week 1, but it wasn't quite ready. I made some money on it, but eventually I bailed on the idea entirely. So I think that this is, let me just, so I think now it might be ready to go. And since this would signal that the yen is weakening, so it was further confirmation that I had to get out of my US yen for the time being. So I went long. I hope I'm right, but we'll see. So yeah, I'll get out of these other positions and then reassess the situation, and I'll see tonight if I can find it. I'm gonna wake up a bit. I'll go to sleep late tonight, most likely, because I want to be able to enter these trades. So we'll see. All right, so I'm seeing opportunities in the pound right now, because I think it's going to strengthen versus its peers. And I got out of all my positions that had to do with the US dollar for the time being. So these are the results for the trades that I closed today. And I just opened a pound Australian. I want to show you what I saw. I just erased all the lines, and I'll redo the analysis on camera. So what I'm seeing here is an important trend line over there, which could be a target, a long-term target. It won't be for the purpose of this series of videos, because this is the last week of that little project that I had. I'll see if you guys found this content helpful, and maybe I'll keep going, but for now that's going to be it. But basically what I'm seeing here is that we have a support over there, a line of support, and price got rejected from this zone and is now against that support. So I would call that a minor support, I guess. And then the main support is this over here. So that's the main area that I'm looking at, and this is why price bounced off of that. And now I think that we're caught between this support and that resistance over here, because price overshot and now it came back to test and now is bouncing off of that. And because of this strong rejection at this low, well, at this low, at this, in this zone, basically I think that we're gonna go higher and more than likely go to at least a some type of regression of this. So I would say that this zone would be my main main target for this trade. It might go further, I don't know, but for now this is the idea of the trade. So if I see price reverses and breaks these lows and stuff, I'll reconsider. But right now, the fact that it's been hanging out in that zone is a good sign. The second good sign is that we've just crossed with a bullish engulfing pattern. We've crossed and we've closed above the weekly pivot, and we are above the daily pivot. It hasn't, the daily pivot hasn't yet moved on top of the weekly pivot like these. So that's not yet a good sign, but I wanted to be a bit early on this trade, and I think that I think there's potential. So right now I'm long this, I'm long this, and I'm long that, because I think that the focus is going to move away from the US dollar for a bit. We're going to see some retracements, and then I'll try to get back into US pairs. But right now my focus is on the pound, so I'll keep you updated. All right, I think this is a very informative example of accepting when you're wrong and how I handle these trades. So my idea here is that I was looking at these charts and I was thinking, well, more than likely the pound yen is going upwards because it's breaking out of this channel. The pound Australian had strong rejection. Now it's in a retracement, so it's a good spot to buy it. And I think it's going to go there. But the problem is when you trade with big time frames like this, it's easy to have really big whiplashes in your account, like big drawdowns. So I'm not really willing to have a big drawdown. I think that this support over here might be tested, but I'm not too sure if I want to hold it that long, because what if it keeps going? Like, at what point do I get out? So these are important things to consider whenever you think you made a mistake. And let me show you the mistake that I probably made here. So I bought based on a bullish engulfing pattern that gobbled all of these candles, and then the price closed above the weekly pivot, but now we're clearly rejecting really hard over here. So I'm thinking that perhaps this was a shakeout, and I got duped. So it's possible here that I have to get out, because if I hold this for 300 pips, I'm going to lose a lot of potential profits. So the way I handle this is I go on a smaller time frame and I look at where the obvious support is. So right now I'm thinking that if price doesn't stop here near the pivot, if the pivot is not able, the daily pivot is unable to support price here, which right now it kind of stopped. So I'll wait and see. If I see price going back in, back above the daily pivot, I'll probably consider holding my my long. But if ever this low here gets penetrated again, I'll exit the position. The other scenario that I have here is that I have a good zone over here. So that's the current support that's supposed to hold this trade. If I see that this support doesn't hold, I'll just exit the trade altogether, because even if it goes here and then retraces, I can always buy at that level. And I just answered a question from a subscriber, and he was asking me, like, how do you combat the fear of going with the trend, because you always have the psychology of, oh well, it's already dropped or pumped so much, so there must be a reversal soon. And that can be very tricky, because then you have that little demon on your shoulders saying, no, you can hold this, you know, it's going to reverse eventually, but what if it doesn't for a while, you know? It's so I'd rather take a bunch of small losses and be wrong a few times and wait for that right opportunity, and then milk it as much as I can whenever I have an opportunity. So right now, I think I made a mistake. If I look at the pound yen, it's retraced as well, and the pound Canadian as well. So this is expected whenever you have a big exponential move like this. It's normal to have some type of retracement. So this one I'm not too worried about, especially with the fact that we're close to this zone here, which was a previous high, which now would act as some type of support. Let me just hold this. So right now it's testing that support, and I'm expecting price to go there. So this one I'm not too worried about. The pound yen, I'm not too worried about either, but if you look on the daily, it is making lower lows and lower highs. So right now I'm really thinking, well, you might have to exit that trade, but at the same time I'm within a retracement. So I think this one I would hold, this one as well so far, but this one makes me a bit jittery. So what I think I'll do here is close my position if this pivot doesn't hold. So I'll wait for the close of that candle, which is in 40 minutes. If I see that within 40 minutes, if price can get back above that pivot, I'll just exit that trade. Because right now, as I was showing in week one, the Euro Australian was making my reversal pattern that I've made a video on. So let me zoom in a bit. And I took a bunch of shorts here and made a bunch of money, but right now it's showing that it's possible that it will start to make lower lows here. And I think the Australian is showing some signs of strength over here. It seems to be going up. But the thing is, if you do some intermarket analysis, you can notice a bunch of trend lines on various pairs that have the same currency within it. So in this case, it's the Australian dollar. So what I think is happening here is that the Australian US is heading towards this trend line. The Australian Canadian is heading to that trend line, and the Australian yen is acting a bit on its own here. This one, I think this is more like the pattern that's happening here. It's more like a triangle that got tested. Right now it's holding, but I think this is fairly weak, but it could go test that trend line, which is very big. Let's go look at the monthly. Yeah, so we're within the, if we take the bodies of the candles over here, yeah, so, you know, lots of noise that can happen here. So if you don't have tight stops, then you can be shaken out. So this I would not short yet, but if I would see this trend line here, which is why I trace like that, if I see this trend line getting broken, then I might consider a short. But right now it could work its way up there and trigger all the stop losses. So So yeah, so all this to say that the Euro Australian right now might be finally heading lower after all this time that I've been waiting for it. But now I don't have a position in it because it wasn't acting as fast as I would have liked it to. So what I was afraid of was that price would go to this big resistance up there. But if you look at the monthly, this is where there are two lines there. What I did is I connected the bodies with a smaller trend line. So that's kind of the rejection zone between these two trend lines. So I had permission to short, but I have to be careful because it might kick like a horse and go back to this stronger resistance. So that's why I think this can be helpful to some people because it's hard to let go psychologically, because now I had a really good day and now I'm eating up all my profits. But you know, all in all, I'm still up $20. So even if I have minus $13, that means that my entry was not optimal. But at the same time, this trade is based off of really long-term charts. So I have to expect some type of retracement and that my entry is not quite on par with what it could have been. So if ever I feel like I'm emotional and I feel like this is really not heading my way, the way I handle that is I just close all my positions. I go on my summary here and I just close everything. If I have several positions in the same pair, I just close everything. I close the book and I walk away from the computer. And then whenever I come back, I look at it with a new pair of eyes, because when you start trading, what you tend to do is when you don't accept that you're wrong. That's ego talking. So what you're going to do in that case is, let's say you're long the pound yen and you're not too sure if it's going to keep going. You're down a certain amount of money on that trade. So instead of accepting that loss, what you can do is put an additional position, but in the opposite direction. So sort of hedging, but what you're really doing is locking in your loss without accepting it, and you're paying more fees for it. Whereas the exact same thing can be achieved by just closing your loss and then walking away from the computer for a while, get back to your senses, and then figure out what the best course of action is going forward. So right now, I think I made a mistake. I'm not sure yet because it's going to depend on this here if it goes beyond this this support and these two support, the pivot and the support, are basically what are holding me in this trade now. I think it is. It will be a good trade, but perhaps my timing is not quite good. So this is what I know it's a lot of, I've talked for a long time and I went left and right, but what I want you to get from this is that this is exactly the process that every trader has to go through when he trades, he or she. It's that you have to figure out when you think you're wrong. And I don't use stop losses anymore because I don't like to be stop hunt. Basically, I don't want to give my data to the broker, but I always have a point in my head where I know I'm wrong, and usually it's a percentage basically of my account. And right now we're really close to that. I don't want to give away. I don't want to finish that day negative. I made $20 on a $400 account, which is what, 5%. So so that's good. You know, it's a good day at the office. If you do that with $100,000 account, you're doing good. You know, it pays the bills. So right now I have to force myself to trade in the same way. And this is why I made this series, is I want you guys to, if ever you're serious about Forex, you got to treat it like a business. So you have to, if you have a small account, you have to trade as small as you can in order to slowly build the account. And then month after month, if you're able to have, let's say, 10%, 20%, whatever, in this case, I'm going to probably double this account in a month. But if you double $1,000 10 times, you're a millionaire. So you got to take it slow. You got to shoot for, you got to play defensive and then really go for the jugular when trades are going in your favor and try to sit on your hands to make these profits. But right now it's starting to go against me. I don't like it. So I'll keep you updated as to what I did. Alright guys, so I had to cut down this trade on the pound Australian. I took a pretty big hit for this size of an account, but it is what it is. The support wasn't looking like it was holding. We had diminishing momentum from the size of the candles, but I didn't want to wait to see if it was going to go and penetrate this support. So I just closed my, my trade. For now, I put it in the loss category, but if ever I see that price goes back to this support over here, I'll look for another long because I think this is a long. But my entry was pretty bad, so mistakes are made. It happens in trading, that's how it is. But I've kept my position into these two other ones. The reason is that the pound yen here went beyond the weekly pivot and is above the daily pivot as well. So we are on the path of least resistance. We broke this resistance and now we are retracing with diminishing volume. So whenever you interpret volume, volume is supposed to increase near the high. So if you're in an uptrend, like this, making higher highs and higher lows, you want your volume to be increasing as you get closer to a high, and then you want volume to be decreasing during the retracement, and that's healthy. And then you want volume to pick up as you start going back up and so forth. And this is how you basically interpret volume. Right now it is doing exactly that. So we're retracing and volume is diminishing. So that means that the downward movement has no power, basically. So I'm going to hold this pound yen, and then the pound Canadian is healthily testing this support, and the volume is diminishing as we are making a lower low. Or a higher low, I should say. So that's it. Whenever I wasn't feeling good about this trade, I closed the books. It's in the loss column. You know, I wish I had a nice girlfriend to give me a back rub to say, you know, it's gonna be all right. You've done the right thing and things like that, but I don't. So I just gotta man up and make mistakes and acknowledge my mistakes, correct them, and move on to the next trade. And that's how you win in the game of trading. So big loss, $15 loss. That's my biggest loss this with this account this month. But you know, I still made I'm still in profits for the day, and that's all I can ever ask. Basically I made almost 5% today, maybe 4%. So that's good. If I keep going like that, I'll have a good week. And I still have these two positions that are open. Now I'm gonna walk away from the computer for a few hours and then come back with fresh eyes and move on to the next phase of the week. All right, we are Tuesday afternoon. So right now I just established another position on the Looney because I think that it's going to complete the head and shoulder target. Basically it's the high over here of the head connected to the point where it breaks out, basically. So that it could be argued that it's here or there, but doesn't matter. But I've combined that with this trend line over here, and I think this zone is a prime candidate to be a target. So I've put my target in that zone. And also it was showing signs of rejection over here, and we're still below the weekly pivot. originally I got out of this trade because I wanted to, I was hoping that price would retrace more and I could short at a higher price. But, you know, hope is not very useful in trading, so that's not what happened. So now I have to adapt to that. I just shorted one lot, which is very small because the loonie doesn't take a lot of leverage on my account, a lot of margin. So I only established one because I plan that if ever I'm wrong and it starts to retrace more, maybe around this trend line or so, or this potential resistance, I will short more, even though the first position is in negative territory. And I didn't really have time in this experiment to show you exactly how I trade, but usually, because I'm often wrong in the timing, but I'm often right in the grand scheme of things about what's going to happen, I've learned to scale into positions and cost average up to 3 times, basically. So I enter one lot. If it goes against me a bit and it retraces and I still feel strongly about the position, I enter another one. And then one last one at the end, all of the same size. And then if I'm wrong, I get out of the trade. But what I do is I trade smaller percentages at a time, and that permits me to get a good average price. But I can't do that really with this size of an account, so who knows? Maybe if the series is popular, I'll do it at a later time, later date, but for now, it is what it is. So yeah, so that's, I'm trading off of this head and shoulder pattern, and hopefully we can get this target over there. The point at which I would say I'm wrong would be if price is able to go back to this point, to the last week's pivot, and if it breaks this this swing low, I would say, yeah, maybe this is gonna keep going up. But for now, I have no reason to believe that, so this is another trade that I wanted to explain. All right, so this is week 4. These are the results for last week. Unfortunately, we're already Tuesday of week 5. I didn't have time to do a bunch of videos in the week 4, unfortunately, and it was a pretty boring week because nothing was happening in the positions that I was seeing for long term. We were in an accumulation phase and reaccumulation, and I think that we are retracing right now, and it's going to resume in the direction of my positions, hopefully. So the net P&L for that week was $80, and I have minus $25 in floating, so about 50 something dollars in profits for last week. Right now I'm sitting at minus 33, minus $35, so I'll show you that in a second. And instead of putting all my trades on TradingView, what I figured is I would make these print screens of the account directly, and I've also worked on a small Excel file that shows a bit more stats as far as the size of the wins and losses that I make, and the evolution of the balance on the graphic. So I'll show you that next. All right, so this is a small graph of the win losses and the fees, like everything is there. So I basically took all the stats from the account, but because of the sensitive information that's in the account, like my name, my address, and things like that, I didn't want to show that, so I've put it into an Excel file to make sure I don't make the mistake of posting that, because anonymity is very important to me. So basically you can see it from the beginning of this account here, and it's going up to 413. But basically what you see here is the win losses. So these are in dollar terms. I figured that as the account grows, I'm probably going to have to put this in percentages, but I didn't think of it at the time that I did this. Right now, what you can tell from here is that what I'm taking are small wins, and then small losses, and eventually a home run, 2 home runs, a loss, which is bigger because now the account is bigger as well. small win, and then small losses. And this is basically how I do it. I'm very defensive, and then when I see something, I go for the jugular and try to maximize my balance. And you can see it here. This is the balance with the fees included, so it's not very linear, because you see all these minus 10 cents, minus 7 cents. These are all fees from the brokers for lending money because of the leverage. So, but you can see here like small wins, and then eventually a home run, and then another home run, and now I'm stationary. Hopefully it's going to go up, but sometimes it goes down as well. Like, I'm not perfect by any means, and I don't have a crystal ball, but I keep doing the same thing over and over, and it tends to increase my balance. So this is a trade by trade by removing the fees, so you can see exactly how it is going forward. Right now my balance is at 409, but right now my equity, I think, is in the 380 something dollar range. So you can see here where it's at 383 is what we have. So this is a wrap up for week 4. And now I'm going to do the beginning of week 5, even though I'm already in week 5.